The cryptocurrency landscape hums with anticipation for the arrival of Ethereum exchange-traded funds (ETFs). These instruments promise to inject legitimacy and ease of access into the Ethereum ecosystem, potentially propelling the world's second-largest crypto asset to new heights. But before we celebrate, let's unpack the nuances surrounding Ethereum ETFs and their potential impact on market sentiment. Demystifying Ethereum ETFs. An Ethereum ETF would track the price of Ether, ETH, similar to how stock ETFs track various stock market indices. Unlike the opaque and sometimes volatile world of cryptocurrency exchanges, Ethereum ETFs would trade on regulated exchanges, offering investors the convenience and familiarity of traditional financial instruments. The bullish case. Several compelling arguments support the arrival of Ethereum ETFs. Mainstream onboarding. ETFs offer a familiar and regulated entry point for institutional investors and risk-averse retail participants who wouldn't otherwise touch crypto. This influx of fresh capital could significantly increase overall liquidity and fuel a sustained price rally. Reduced volatility. Increased institutional participation often leads to smoother price movements and reduced volatility. This could attract institutions looking for alternative asset diversification without the extreme fluctuations associated with the current crypto market. Enhanced credibility. An SEC-approved Ethereum ETF would be a significant stamp of approval for the Ethereum ecosystem, potentially alleviating concerns about regulatory uncertainty and legitimizing the cryptocurrency in the eyes of traditional investors. Positive network effects. Increased mainstream adoption could drive further development within the Ethereum ecosystem, attracting talented developers and fostering innovative applications. This, in turn, would strengthen the value proposition of Ethereum and potentially bolster its price. The bearish cautions. Despite the optimistic outlook, some concerns merit consideration. Regulatory hurdles. The SEC has yet to approve an Ethereum ETF, citing concerns about market manipulation and the underlying asset's custodianship. Navigating these regulatory hurdles could be a lengthy and unpredictable process, dampening investor sentiment in the interim. Exuberant bubbles. The introduction of ETFs could attract a wave of speculative capital, potentially fueling unsustainable price bubbles followed by dramatic crashes. This boom and bust cycle could further tarnish the reputation of cryptocurrencies and deter long-term investors. Technological immaturity. Ethereum, while maturing, still faces technological challenges with scalability and potential security vulnerabilities. An ETF tied to an asset with such evolving technological underpinnings could expose investors to unexpected risks. Unforeseen consequences. The long-term consequences of widely traded Ethereum ETFs remain unclear. Potential impacts on broader financial markets, regulatory landscapes, and even societal structures are difficult to predict, increasing the uncertainty surrounding their arrival. Market sentiment, a shifting tide. The news cycle surrounding Ethereum ETFs has significantly swayed market sentiment. Positive developments, like the launch of successful Bitcoin ETFs in the US, have sparked bullish enthusiasm. Conversely, regulatory delays and negative comments from officials have triggered waves of fear and uncertainty. Social media sentiment analysis reveals a similar ebb and flow. Optimistic tweets discussing ETF moonshots surge during bullish periods, while bearish hashtags like fcrash dominate when concerns resurface. Navigating this dynamic landscape requires investors to remain critically informed, recognizing the hype cycles while seeking out nuanced analyses of the potential impact of Ethereum ETFs. Beyond the hype, a holistic view. The arrival of Ethereum ETFs is undoubtedly a significant milestone for the cryptocurrency ecosystem. However, their impact will likely be more complex than a simple price surge or crash. Instead of succumbing to short-term hype or fear, investors should adopt a holistic perspective, considering the following. Focus on fundamentals. Regardless of ETF developments, Ethereum's long-term value proposition hinges on its technological advancements, network adoption, and real-world application potential. Evaluating these fundamentals should be the cornerstone of any investment decision. Embrace diversification. Whether the market swings bullish or bearish, a diversified portfolio mitigates risk and ensures exposure to both traditional and emerging asset classes. Manage expectations. Understand that Ethereum ETFs are one piece of a larger puzzle. Their impact, while potentially significant, will unfold over time and should not be the sole driver of investment decisions. Stay informed and vigilant. Remain updated on regulatory developments, market analysis, and technological advancements within the Ethereum ecosystem. Actively managing your information consumption empowers you to make informed decisions amidst the inevitable hype and uncertainty. Conclusion. The Ethereum ETF story is still being written. While the potential for a new era of mainstream adoption and price appreciation is undeniable, significant uncertainties remain. By considering both the opportunities and challenges, staying informed, and adopting a long-term perspective, investors can navigate the hype and position themselves for whatever the future of Ethereum ETFs holds.